I'm delighted to be here in Davos to talk about everything that's going on. Of course, we have a big U.S. administration. I'm delighted to be joined by the Banque de France governor, Mr. Francois Villeroy de Galhau. Thank you so much for joining us, Governor. Look, there's a lot going on. You go in the Congress Center, you go along Promenade, and people are anxious. It's CEOs that are anxious. It's leaders that are anxious because of what's happening with the Trump administration in Greenland. How much do you worry about these extra tariffs on champagne? 200%, possibly.
So champagne, by the way, is an excellent French product, if I can use this opportunity. But more seriously, in this crisis, we should remain calm, and each of us should carry out his duty. So it means that it's up to political leaders to manage and hopefully solve political tensions, which are at the core of this Greenland crisis. And it's up to us, central bankers, to assess the economic consequences and possibly the monetary policy consequences of tariffs. We can discuss there.
But, honestly,
I think we were not that bad in Europe in the last year, if you look at our collective reaction.
But, Governor, I have to say, I mean, most economists had said, look, we'd gone through the worst when it comes to tariffs and threat. If you have 200% on champagne or something else, but this is what we're looking at right now, could it change the trajectory for European monetary policy?
No, let us take perhaps a broader view on tariffs. So far, and there was Goldman Sachs analysis, for example, tariffs were paid by the US economy, be it US businesses and then US consumers.
Yeah.
And Goldman Sachs figures are quite impressive. It's around 90%. And there was even a study published yesterday by the famous Institute of Kiel in Germany, Professor Hinz, which says 96%. So what we have to assess is the effects on activity and on inflation. On activity, tariffs are obviously bad news for everybody. But it's a bit through the direct effect. It's still more for trade uncertainty. And the problem is that, again, this crisis raises, again, trade uncertainty. So it's bad news for everybody again, including the US. On inflation, which is our core mandate, so far, and I said it 1 year ago, tariffs didn't have an effect on our inflation trajectory. As you are aware, we were very successful diminishing the inflation for, if we take Davos 1 year ago, we were 2.4, we are now at 1.9, so very close to target. We diminished interest rate from 3% to 2%. Yeah. So we should assess all the possible effects if there are additional tariffs. We don't know yet. Again, it's a political crisis, but there could be a limited direct inflationary effect. But there could be also an appreciation of the euro, which plays in the opposite direction, some downside effects on activity. So if I take the whole picture, I would say that probably the inflation on European inflation, I stress European inflation, I expect it to be muted.
What should the European response be?
On monetary policy, which is, again, our core business, we are in a good place, as Christine Lagarde stressed, but I stress once more that we should be agile and pragmatic, so look at data. On more general trade policies, this is not within my remit, but obviously we must find a political solution to this crisis.
Governor, you said it was fanciful to expect a rate hike this year. Is it still the case?
Barring a major external shock, I said, but I think it's still the case. Yeah. There are downside risks on inflation, which remain at least as significant as the upside risks. There are upside risks also, but to mention some downside risks, I mentioned the possible appreciation of the euro, linked also to some attacks on the Fed independence, which are weakening the dollar. If you look also 1 year ago, the euro has strengthened, which people probably did not expect in Davos in January 25. It's a sign of confidence in the euro. There are also the question of Chinese import, wage moderation. So there are many factors which could really dampen inflation, but we will see. We are, as you know, data-driven and meeting by meeting. These are not only words.
At this point, do you think it's fanciful to expect a rate cut this year?
I didn't say that.
That's why I'm asking.
And I don't say it again. We'll see. No, I'm not announcing it, but again, we are pragmatic. If I had to sum up, I would say that with 1 year hindsight, Europe has managed the situation rather well cyclically. Growth has been resilient in the euro area, 1.4%, more than expected. Interest rates cut, the euro appreciated. What we have to do now, as still more in this crisis, is to leverage on our economic assets, and we have significant ones, to increase our growth more structurally. This is about the Draghi report, and there were progress made, but not enough. Look at the 28th regime, look at the Saving and Investment Union, look at the Omnibus directives. But we need to act quicker, stronger, and probably clearer. À la Delors, if I may. Yeah. It was a calendar, a mobilizing date, a comprehensive package. I hope it will come in the next month.
Do you think it will come? Because again, I know this is now for the time for Europe to act, but we've been saying it for quite some time. At the same time, if you look at geopolitics, there's just more shocks. So I don't know whether it's a distraction or focusing the minds.
Again, Europe has acted, not quickly enough, not strongly enough, but I mentioned some progress. And it's good on the cyclical side, not fast enough on the structural one. But again, if this difficult situation has one virtue, is to push Europe to accelerate what I call the three I's. Integrate the single market, invest better. This is the Saving and Investment Union, and innovate faster. This is simplification and omnibus. Okay. And I guess there is a growing political consensus about that. I can say there is a complete consensus around the table of the Governing Council.
Governor, going back to inflation, I mean, you're expecting actually inflation to run close to but below 2% for this year and I think next year. I mean, is it a danger that you're kind of slightly below, or is it not a problem?
You must look also for the forecast horizon, and in our forecast we are back at 2%. So we will judge again meeting by meeting if we are really around the 2% now for 8 months in a row since May. Yeah. So this is a very good position again. If there were to be a more significant and a more lasting deviation, then we would adapt, but we are not there at present. Let us be pragmatic in this very polarized, and political world. You know, this is also the role of central banks to keep calm and focused on their duty.
Do you think we're importing...
if I may,
yes,
then we guarantee price stability and as much as possible financial stability, which is a significant contribution in this crisis. Financial stability, we should be really very focused because there are some risks.
Governor, I mean, central banks have always been there, right, to be pragmatic and to help. You mentioned central bank independence in the U.S. I mean, how much of this is a worry? The market hasn't really latched onto it. But this is a major anchor.
Most central bankers worldwide, including myself, express their support to Chair Powell. I won't repeat the statement, but it's loud and clear. There was also significant support in the U.S. So like many things, it's mainly a U.S. debate.
Yeah. Are we importing deflation from China? Or do you see that as a possibility going forward?
Increasing imports from China with significant figures. If you take the last 6 months, we know there was an increase in volume of 11% of Chinese imports, with lower prices. So it's a factor which contributes to lower inflation. This is why I mentioned it among as a downside risk on inflation.
And you also mentioned the de-anchoring, right, of inflation coming from the U.S.
Yes, but we are not. There are various factors. If you look at the U.S., there could be some de-anchoring, which runs to an increase of long-term rates. And this would be a very adverse situation linked to the attacks on the Fed. So I strongly hope the Fed independence will be preserved. In euro area, I see no de-anchoring of inflation expectations. Again, this belongs to the good place.
Again, you've warned that France is in a danger zone when it comes to the deficit. If it can't get its deficit within 5% of economic input, what will be done? I'm not going to ask you what can be done.
Here we have some good news since yesterday, because the Prime Minister announced a deficit at 5%, which is a significant reduction step. It will have to be followed by other steps in the following years, and we will probably have a budget. So these are the good news of yesterday. Now let us see precisely at the content and what will happen in the parliamentary debate. But I would say that in this cloudy sky here, there is a bit more light about French fiscal policy.
But are you worried about hedge funds? Are you worried about what could be the triggers for a possible sell-off in France?
But again, now there is a commitment by government and parliament to bring a deficit back to 5%, which is a positive sign towards financial stability. Now, the Banque de France published this morning its financial stability report, and we mentioned 4 risks very quickly: public debt, and not only in France, valuation of AR, cryptos, and non-banks and private credit. So on all this front, we should look everywhere with great caution. But again, on fiscal policy, there are rather good news from France in the last hours.
Monsieur de Galhau, what do you worry actually when it comes in general to financial stability across the world?
I worry about these 4 risks I just mentioned. And so we should keep very cautious on that. There is room for simplification on some banking rules in Europe, and we advocated that with the ECB and SSM, but we shouldn't go to deregulation. This would be a more dangerous situation.